Let's talk about non-purchasing spouses and whether or not your spouse should or should not be on your home loan, and why that matters, when it matters, and when you should do it. So ultimately, a non-purchasing spouse, NPS, is kind of the acronym we use in the mortgage world. A non-purchasing spouse is somebody that is, and we'll just take myself, let's pretend I'm buying a home, and Caroline is my spouse, my wife. And if we were to buy a home together and I'm the only one that's going to be on the note, I'm the only one doing the paperwork, I'm the only one that's going to be on the note, um, she is then the non-purchasing spouse. Her name is not on the loan application. She is not going to be liable for this mortgage. Now, in the state of Texas, and there are 8 community property states, and there you can kind of think of, they kind of go up through Washington, and you can see this, like they kind of circle down around California. So there's 8 of them. I'll put a map up here. In community property states, there's 8 of them. They're going to act very differently than the non-community property states. So community property means what's mine is hers, what's hers is mine. So in Texas, a non-purchasing spouse, if I'm buying a home to live in for both of us, and I'm on the mortgage, I'm on the note, she will have to still show up to closing and still be on title, or at least sign the paperwork that gives her, the rights and access to it, because again, we are a community property state. So a non-purchasing spouse in Texas is going to have to show up, as well as these other community property states. They have to show up at closing. If they cannot or do not want to, they can do what's called a power of attorney. And so I'll put a link down around. There are certain rules. It's not just generic power of attorney. Like, oh, I got one of those. No, you don't. It has to be property specific for the house you're buying. So I'll put a link around that for as well. But when it's a homestead, meaning a home you're going to live in, community property state, your spouse must be there, even if they're not on the loan, the non-purchasing spouse. For second homes and investment properties, you do not need to have the spouse involved. So in theory, I could go buy an investment property and never tell Caroline, which would be really bad for a marriage. But in theory, you could do that. So if it's a homestead, any community property state, the non-purchasing spouse does need to show up to closing. Now, for qualifying, there are loans, and these are typically government loans. Government loans, if you have a non-purchasing spouse, meaning somebody that's not going to be part of the loan program, you do need to include their debts in the community property states. So again, in Texas, if you want an FHA, a VA, USDA loan, you're going to have to go in there, and we are going to have to use, even if Caroline's on the loan, and I'm not a veteran, so let's take FHA for this example. If I go buy a home using FHA financing, I have to pull a credit report for Caroline, but the lender would pull credit report for Caroline and me, even though she's not going to be on the loan. And they're going to take any debts that she has, like let's say her car that I'm not on, and they're going to make sure I qualify with that debt because we are a community property state. So non-purchasing spouses on government loans will need to have their credit reports pulled so they can include those debts. And so that's, you're like, well, that stinks. Yeah, it does. So the reality is, if there's income, if Caroline has income to use and her credit's good enough, we would like to include her on the mortgage if I have trouble qualifying with those extra debts. That's why, but a non-purchasing spouse may be left off, even if she has income. If I can support the whole thing by myself, maybe she's a non-purchasing spouse, meaning not on the mortgage, because maybe her credit is bad and would hurt us from an application standpoint. And if I can qualify, if my income's good enough to qualify, then yeah, let's get her off so that way we don't have to have her credit bringing us down from a rate standpoint. So that's, to when to have one, when not to have one. If they can get put on and help the loan, terrific. If they hurt you and you can qualify without them, then yeah, make them a non-purchasing spouse, because then you don't have to use your credit. Because just so you know, from a credit standpoint, the mortgage industry uses the lesser or the lower of the 2 credit scores of 2 people. So even though mine's stellar, if I make all the money and Caroline comes on, let's say she doesn't have a job and doesn't have income, if her credit score is lower, we're going to use that credit score. So that's why a lot of times they become a non-purchasing spouse. Again, you got to use the debts for government loans. For community property states, they have to show up whenever you buy a homestead. And beyond that, I think that's really the biggest thing. As far as signing at closing with your non-purchasing spouse, I'm going to say a dozen pieces of paper, right? You got to sign kind of the important stuff, right? But all the junk docs, they don't have to sign. So they do need to show up to closing. Their part, probably like you're signing 80 to 100 pages. They're going to sign, all of like 10, give or take. So that hopefully gives you an understanding of when to use one, why you have to use them, when not to use them. And it's certainly, if you have questions about your program or your loan or anybody else's in particular, feel free to reach out to the Mortgage Mark team. We are here to help. And when you think mortgage, think Mark.